Welcome back to the Global Business Report here on Arise News. I'm MD&CEO coming to you this morning from Nigeria's commercial capital, Lagos. Joining me in the studio to discuss the status of Nigeria's Wealth Fund and the Second Niger Bridge is the Chief Executive of the Nigeria Sovereign Investment Authority, Mr. Uche Orji. Welcome to the Global Business Report.
Thank you for having me.
Okay, so Uche, we're going to go straight to the questions, right? So the Nigerian Sovereign Investment Authority, also known as the Sovereign Wealth Fund, was established by the Nigerian Parliament to basically build a savings base for the Nigerian people, enhance the development of the country's infrastructure, and also shield Nigerian people from exogenous shocks. So for the purpose of our viewers, can you tell us the status today of the fund, as well as the value of assets under your custody?
Sure. Thank you very much for that. As of today, okay, let's start with the published accounts of 2017. And then today, the year hasn't ended yet, so I'll probably tell you where we are. But we still have a few more, a month to go before the year ends. And then we can publish our accounts for 2018. In terms of assets contributed to the funds, so far we have assets to the funds of about $1.5 billion.
Okay.
We've earned returns over the last 5 years. It's been profitable for 5 years in a row.
Okay.
But the returns are, on top of what has been contributed by government. So $1.5 billion is the actual size of contributions to the fund.
Okay.
Now, there are also third-party funds that we manage on behalf of various agencies of government and also on behalf of the government. So there was $350 million we managed for MD&E, which we've returned.
Okay.
That mandate expired at the end of July. And we returned the funds, I believe, at the end of August.
Oh, 2017?
Or 2018.
18, okay.
18. Then we also have $650 million, which we manage as part of its Presidential Infrastructure Development Fund.
Okay.
Again, funds that are not really part of NSIA shareholder funds. So if you look at the NSIA shareholder funds altogether, it's roughly about $1.5 billion of contribution. And last year, we made profits of $95 million. The year before, we made
$95 million.
$million last year. And the year before that, over $130 million of profit. Okay. So it's been quite accretive. So in terms of the status today, we're roughly at about $1.75, $1.8 billion. Yeah.
Okay. Now, we have 3 major funds under your management, which is the Stabilization Fund, the Future Generations Fund, and the Infrastructure Fund. How are the assets allocated to each of these funds, and which of them generates the most returns? Because when I was reading about it, I saw that 20%, of course, is to the Stabilization Fund, and then 40% each to the Future Generations Fund and the Infrastructure Fund.
That's correct. So there are 3 funds. So when people look at the NSIA, it's not just one fund. There are 3 different funds with 3 different mandates.
Okay.
So 20%, initially we started with 20% in stabilization, 40% in future generations, and 40% in the Nigeria Infrastructure Fund.
Okay.
With different horizons. The stabilization fund actually short-term is not expected to generate a huge amount of return. Because it's short-term liquid instruments, we're expected to liquidate within 7 days and make any demands from the federal government or from Federation, whenever that's due. So short-dated instruments, very liquid, is expected not to earn a huge amount of return. But last year, we did about 6% return on that fund.
Okay, 6%.
6% in dollars.
On the stabilization
fund.
Okay.
The Future Generations Fund is really where we expect to see a lot of returns, okay? That is about 10-year horizon, and it's across a diversified asset pool from private equity, public equity, global, local. Also, we look at things like other diversifiers. We have hedge funds assets, we have commodities investments, we have real estate investments, all in that fund.
Okay.
That fund returned 8.6% last year in dollars. Now, we expect that fund to be really where that's the engine of the NSIA in terms of generating returns because of the kind of assets it's invested in. Some of those assets actually have longer term. So if you take private equity, for example, we anticipate to more than double our money in every private equity investment we make. So over a 5-6 year period, they're looking at an annualized return of 15 to 20% in private equity.
So have those expectations been met so far?
In some, yes.
Okay.
Some, the investments are still running.
Okay.
Right, because private equity, when you invest, most times is at the end of the investment, you sell the assets. That's when you actually now annualize your returns, okay? Now, the infrastructure fund is very different. The infrastructure fund, the shortest thing we've done in infrastructure is our healthcare projects, for example, which we are commissioning a cancer center in January at Lagos University Teaching Hospital as part of a PPP program.
Okay.
We're also commissioning a diagnostic center in Kano and Umuahia. That took 18 months to build.
Okay.
And so the returns expectations are very difficult for that. We have a 20-year horizon in our infrastructure funds. You mentioned the Second Niger Bridge. That's going to take 25 years. About 3 years, 4 years to build. and 25 years before we actually exit that investment. So that is expected to make money. We expect that will make, in some cases, on average, we're looking at an annualized return of about 7-8% in some of those projects. But that's not a snapshot you can take immediately.
Yeah.
It takes you a while to invest, build those assets before you earn your returns. So that's really how you think about the funds we have under management.
Okay, so to answer my question, the fund that generates the most returns is the Future Generations
Absolutely.
Fund. Okay, now under the Infrastructure Fund, the NSIA has undertaken the funding of the Second Niger Bridge, as you just mentioned now, which is obviously a major infrastructure project that you've said is going to take 25 years.
To exit.
To exit.
To exit, yes.
And it's supposed to provide a link between the southwest and the southeast in Nigeria. So what is the status of that project, and how much is it costing the NSIA, and who are the other partners funding it?
Sure. So the construction period, we expect to finish the project. Let me make a few things clear. We expect to finish the project by 2022. Okay, done. The bridge is built. And that includes the bridge, the access road, because it's a big project, right?
Of course.
People have I'll just put in perspective for you. The bridge section alone is about 11.7 kilometers. The third mainland bridge is about 13 kilometers. Okay, that gives you an idea of what we're looking at.
Yeah.
Then you have an additional road section of 33 kilometers. Okay, so it's a massive project. So we're expecting completion, construction to be done by 2022 at the latest. Okay. Then we start operating. It's a toll bridge, it's a toll road. It's going to take time before we earn our returns and come back on that project. Where we are today, most of the piling has been done. As at November 2nd, which was my last status visit on the project, 70% of the piling is done. If you drive past there, you see most of the piles have all come out. The pillars are up. We expect by March, latest by June, most of the pillars will be up. And by the end of 2019, most of the slabs will be on. So you actually see a bridge by the end of 2019, okay? Now, the access road, approach road will still take another couple of years before that's completed. So we're targeting commissioning by 2021, 2022. That's what we're looking at.
Well, but after completion, are there plans to make the bridge have a toll in order to guarantee its viability?
Absolutely. No, it's a toll bridge.
Okay, it's
a toll bridge. Yes, it's a toll bridge.
What other infrastructure projects are you funding other than the Second Niger Bridge in the southeast?
So there are 5 key areas that we're involved in infrastructure. Okay, roads is one, power, agriculture, healthcare.
Just write this down. And roads, infrastructure, power, and agriculture.
And more recently, we're looking at gas and gas-related infrastructure. Okay. So on roads, Second Niger Bridge is one, Abuja-Kano Highway is the second one, and Lagos-Ibadan Expressway recently. We've actually just released funds for that as part of a project under our portfolio. Now, that is being managed through this Presidential Infrastructure Development Fund that is being managed by the NSIA. Okay? So those are roads projects. Agriculture, we were involved in the Presidential Fertilizer Initiative, which we ran at the NSIA, which, by the way, I think has been a spectacular success. At the beginning of 2014, there were 36 blending plants across the country, most of them moribund, not working. We used to import fully blended fertilizer. There was huge amounts of money spent on subsidy. But this could have been replaced through local manufacturing. So we entered into a transaction where we actually had the industries revived locally. And for the first time in the last 2 years, there's been no complaint about fertilizer shortages. And by the way, there was no subsidy spent on these things, okay? So we will have had 50 billion naira of subsidy spent, but the reality was that none was spent. On some of these programs. Okay. So agriculture has been, for us, one of the standout areas of success. We have a joint fund with UFF, a company backed by Old Mutual of South Africa, to raise a $200 million fund to invest in agriculture in Nigeria. They've made their first investment in Nasarawa State and making a few other investments right now in Gurara area and in Edo State, and more recently we're looking at things in Abia State. So it's been quite busy in agriculture, and I think for us that is one area where we expect to see a significant amount of success, because we're also in partnership with a specialist agriculture fund to work with the NSIA. Now, in healthcare, I mentioned the projects we're doing in healthcare. Yeah. So January 15, our cancer center.
Wait, in healthcare, you talked about the Luth
project.
Okay,
yes.
the Luth project.
It's a PPP with Luth. At the moment, it's owned by the NSIA. We expect over a 7-year period to earn our returns, and then over time transfer to Luth. In that 7-year period, we'll have earned the money back. We'll have been able to also train the people and personnel in Luth to be able to run it. So it's a build, operate, and then transfer eventually. The same is happening in Kano, the same is happening in Umuahia. So we're looking at commissioning all 3 projects between January and February, but Luth certainly is the first to go. January 15 is the handover date, and then we'll start taking patients soon after that. Okay, now that is the first phase of 13 of such projects across the country. There's a huge amount of opportunity in healthcare that we're wasting in this country. I mean, people still go to Ghana for cancer treatment. We can actually...
agriculture, so many different
Oh, absolutely.
sectors.
We can get this done locally. And I think that's just something that we see as an opportunity. And by the way, these are not social investments. These are actually commercially viable investments that we're making across this place. We expect to make annualized by between 8 and 12% on some of these projects in healthcare. Now, in gas-related infrastructure, it's still early days in gas for us, but we believe that it's part of a middle market industrialization strategy for Nigeria. The recent policy to increase the cost of flare gas, I think, is providing an opportunity for people to actually invest in this area. One of the things that's an offshoot of our agriculture program is we are building an ammonia plant with OCP of Morocco. That was announced last year. We're still in the first year of actually doing the preliminary work on that. But we expect that that will help rebalance the fertilizer trade. What is the fertilizer trade? At the moment, we buy phosphate from Morocco. But phosphate is coated with ammonia. Ammonia is made from natural gas. Nigeria has natural gas, but we flare it, right? So why don't we turn around and make ammonia for their export? That's the logic behind the agreement with OCP. So we're looking at sometime in the next couple of years to have a plant ready for export of ammonia. And that turns our natural gas has been wasted into product that we can actually make some money off of.
Uche, so now we're talking about, of course, a lot of projects. And since we're on the commercial viability of some of these projects, I want to look at your financials. So at a glance, your audited financial accounts in 2017 show that even though the NSIA declared profits after tax of 22.6 billion naira, some of your investments in fertilizers, like you just mentioned, the blending facilities were operating at a loss. So why do you continue to retain such investment subsidiaries if they're not profitable?
No. So it's the first year, right? And from this year, we're going to see us recoup a lot of those losses, right? So over the next 2-3 years...
From this year, you're going to...
Oh, yeah, we'll start to recoup some of those losses. And my view is that, over the next 2-3 years, it was the first year of operation, right? So we took 12 blending plants from standing start, from actually completely moribund. Went to these places, they looked like a war zone, completely abandoned.
So you're saying progress has been made,
oh,
and
significantly.
Of course, at first, you were going to experience this loss regardless.
It's the first year of any business, right? So if you give it a couple of years, my sense is that, the business plan we have is that by the third year, you start to see us recoup a lot of these losses.
Well, Uche, I have so much more to discuss with you, but we have to take a quick break now. You've been watching the Global Business Report here on Arise News. We have so much more after the break, so don't go anywhere. Welcome this morning from Nigeria's commercial capital, Lagos. Mr. Uche, back to our interesting discussion. So, of course, we were talking about your financial reports, and we're talking about some of the fertilizer blending. Now, I wanted to also talk about your shareholder funds. In 2017, looking at those funds, the annual report stood at 501 billion naira, or the equivalent of $1.64 billion. Obviously, if you're using the 305 naira to a dollar exchange rate. It's apparent that your shareholder funds are stagnant. Why is that the case? And isn't this indicative that returns on investment appear to be very low?
Well, no. I mean, there are two ways to look at it. The first is obviously contributions have not been as strong as they should be, right? So we've had $1 billion, and then we had $250 million coming in towards the end of 2016, and then $250 million coming towards the end of 2017. So you need to look at it in terms of return on average assets, right? So the assets have not. So anyone looking at 2017, we didn't have 500 billion naira for all of 2017. Okay, so we had 1.2. Again, it's easier for me to speak in dollars because the exchange rate conversion is a little bit challenging for me. But $1.25 billion was what we started the year with. And then we received $250 million towards the end of the year. So you can't use the snapshot at the end of the year. That's not really the right way to think about it.
But $1.25 billion, how much had been used up before you got that $250 million?
So most of the year was $1.25 billion. Most of the year. We didn't have the last 250 until September. We didn't really put it to work until November. It takes a while to put that kind of money to work, right? So the easy thing to do is to simply use most of $1.25 billion for the year. Now, the returns on that is coming out, like I said, average of 7.6%. Right, which in dollar terms is not something to be sneezed at, right? It's not inconsequential, right, in dollar terms. And again, the three different funds have two different mandates. The stabilization fund is not expected to, the benchmark is 2%, right? The benchmark is capital preservation in dollar terms, right? But we made more than that. Each fund has its own benchmark, right? So
you said you made more than that. How much more did you make?
We made about 6%.
Okay.
On the stabilization fund.
Okay.
Against a benchmark of 2%.
Okay.
Right? The Future Generations Fund, it made close to 8%, more than 8%, sorry, about 8.6%. I don't have the numbers right in front of me, I apologize. So, and it's 2017 we're talking about, right?
Yeah,
so this number's a little bit, you can always go back to the accounts and look at the numbers. Now, could that have done better? Yes. But the standard criticism on this job is very simple. Lose money, you're a fool. Make money, you didn't make enough, right? So that's standard. So I came into this job knowing that everybody has a right to be curious about that and make those statements. But when I took this job, one of my mentors, who had been the CIO of the Korea Investment Corporation, said this to me. He said, the standard criticism of this job of a sovereign wealth fund manager is you could never satisfy people on performance. You know, don't lose money. But if you make money, no matter how much money you make, it's not enough. But in aggregate, that I don't think is something to sneeze at. Now, it's not top quartile. It's second quartile in terms of when we look at our peers. Because the real challenge of this job, frankly, in a market that's quite volatile. By the way, 2018 is turning out to be a hell of a lot more volatile than 2017.
Absolutely.
This same year, the US stock market made record highs. And then this same year, in two to 3 weeks, it lost everything.
Exactly.
Right? It's an incredibly volatile market. And so holding stable sometimes is actually not a bad thing. And it's a lot more challenging than you think.
So are you saying that part of our assets are invested in the US stock markets?
Some. Some, yeah. 10% of the FGF is in developed markets.
Isn't that too volatile?
It's an asset allocation that we agreed and published and said this is what we're going to invest in.
But why don't you invest in bonds which are safer?
Are they? What makes you think they are?
They are safer. Now, you mentioned your accounts.
No. Let's go to that for a minute, right?
Okay.
This is what happens to bond prices.
Okay.
In a rising interest rate environment, bonds tend to collapse in terms of valuation. Do you know that? So, and then two, if you invest in a corporate bond and the company goes bankrupt, it's the same risk. So the point I'm making is that it's safer than equity.
With stocks, the risks are too high.
Yeah, with stocks, the risks are too high, but it's a small allocation. So if you there's a sovereign wealth fund that's the biggest in the world. The asset allocation is on the website. 60% is in stocks. We are 10% of Future Generations Fund. So it's quite small, but you need to have some exposure there because last year, for example, our emerging market equity investments made as high as 25%, right? Okay. I know the risk is high, but you also have to have, that's why diversification is important. You know, so a little bit of this, a little bit of that. We have some bonds, we have some hedge funds, we have some public equities, we have some private equity. So all of that is what created a diversified asset pool, in my opinion, that I think it's actually been helpful for us. Okay,
now, earlier you mentioned your accounts. Your accounts also showed that the stabilization and the future generation funds, all the investment fund managers used by the NSIA are foreign, save for the Africa Capital Alliance and one or two others. Why is that the case? Do you not have confidence in local fund managers? And how will we build capacity if we depend solely on foreign investment managers?
So let's go through that, right? Stabilization fund is mostly outside of the country. You can't stabilize with your local investment. You stabilize with what you have outside of the country. Our intervention currency is the US dollar, so we try to preserve value in US dollar terms. So that's stabilization fund. On the Future Generations Fund, we actually have more exposure than what you have there. We have 6 Nigeria-based private equity managers. The NSIA is on record as being one of the biggest supporters of local private equity capability. We've backed almost every single fund that's local: Synergy, Verod, ACA, Helios. You can name all of them. Cardinal Stone, we're in all of these funds. Okay. They're all at different stages of their investment. They're all calling capital at different stages, small amounts, big amounts, but they're all part of our stable of our asset managers. So one of the things we really want to accomplish in the NSIA is actually helping create this capital pool of private equity. Because I think that's a big missing piece in our entire capital structure in Nigeria. Most companies don't have enough equity. So we're backing all of these companies and helping them raise capital from outside of the country. So it's not correct to say we don't have any confidence in them. We do. But again, our threshold is extremely high. This is not charity, okay? This is real money that tomorrow, if I lose
that has to be commercially viable.
You're going to be.
But you can only reach this threshold by making sure that we have local foreign managers.
Oh, we do. We do. Like I said, there's hardly any local private equity fund today that's passed our due diligence that we haven't backed. Hardly any. Like I said, I mentioned about 6 of them. And they're not too many, to be honest.
They're not too many?
No, they're not too many in this country. They're not. I think there are about 8 of them.
Okay.
Or 9.
And you've mentioned 6.
Yeah, we've made 6 of them that we've backed, yes.
Okay. Well, I want to talk about Twitter, because nothing is as interesting until you introduce feedback that you're getting, of course,
which is great, by the way. Yes.
From the Twitter Nation. So yesterday, the former managing director of the Asset Management Corporation of Nigeria, Mr. Mustafa Chike Obi, criticized the Nigerian government for issuing bonds at average yields of about 9%, adding that the NSIA, with holdings mostly in US dollars, reported returns of about 4% in 2017. Now, he went on to wonder why the NSIA was not investing in Eurobonds and why the government was borrowing at 9%, thereby saving 4%. What's your response to his question?
Sure. I mean, I think, first of all, there are two mutually exclusive arguments, and bringing them together in one tweet. That's the problem with Twitter. I don't tweet because it's really difficult to sometimes not come across. But that's the
great part of it.
No, but that's a fantastic part of it, but we'll come back to that in a minute. So there are two mutually exclusive arguments. One is borrowing at 9%. Two is what the NSI is returning. Why is the NSI not investing in it? I think that's just the conjunction that's a little bit difficult for me that I'm going to address in a minute.
Okay.
First of all, it's a fundamental misrepresentation of the fact to say we earn 4%. It isn't. I can explain to you.
Okay.
You cannot take a snapshot at the end of the year. Every basic accountant knows to use return on average assets, not at the end of the year. You didn't start the year with 500 billion naira. You started the year with less than that.
Okay.
So as the capital came in, and as I explained to you, most of the capital came in towards the end of the year. The new capital came in towards the end of the year. So the real number is higher than 4%.
Okay.
Two, we manage money for the federation, not the federal government. Whether we invest in these assets or not is an exclusive reserve of the NSIA. Three, the federal government borrowing money at 9.25%. We've just been through a world of rising interest rates recently. It wasn't the case for most of the last 4, 5, even 10 years, to be honest. So there's a new president of the United States, and they're pushing for high interest rates, there's trade war, all kinds of things that are leading to high yields.
Of course.
So it's not just an experience on the federal government of Nigeria, it's an experience that you're seeing across most of the countries in the world. Emerging markets in particular. Look at Turkey, for example. Look at Argentina, right? Yields are like, at a point it was almost 25, 30%, in some cases 40%. So there's a rising interest rate environment that I think is a challenge for most emerging market economies. Now, so I've dealt with the fact that the returns are not 4%.
Okay.
Take a snapshot at the end of the year. Different funds, different mandates. Look, I'm investing in healthcare. We're investing in Second Niger Bridge. For the first 3 or 4 years, it's not going to make any money. It's probably going to lose money before it starts to make any money. So you can't just take that snapshot. It's really not the right thing to do. It's not, frankly, with respect, it's not the smart thing to do.
Okay.
The way to look at it is take an average. And then back to whether we're investing in Eurobonds or not, it's up to our board and management to decide whether it's the right thing for us to invest. And we've owned corporate bonds in Nigeria, by the way. We have. So it's not outside of our remit to own it. But at the same time, like I said, each of the funds that I described have different mandates. Some of them might be able to invest. Some of them might not be able to. The infrastructure fund may not be able to invest. Yeah. The future generations fund might be able to invest up to a certain amount of money. We're looking at it. But you can't. I'm sorry, I can't go any further.
You can't ask it as one question, is what you're saying.
You can't. But I also think, like I said, there's a standard criticism about returns for every sovereign wealth fund. You never make enough money. And if you lose money, you're a bloody fool. And I think what we're trying to avoid here is just making sure we don't lose money. Or just making sure you're not looked at as a bloody fool. Exactly. And ensure that we're earning returns that are, at least on par with some of our peers. We're in the second quartile in returns, which is, it's not great. I like to be top quartile. But, there's a lot of work that's involved in getting there.
Of course. Okay, well, anyway, the NSIA is a signatory to the Santiago Principles, which provide for the generally accepted principles and operational practices for the sovereign wealth funds around the world. Now, however, in terms of asset size, Nigeria has one of the smallest wealth funds, and we have oil. So does this stem from the lack of political will to save excess proceeds from crude oil sales by the Nigerian owners of the fund, which is obviously, the federal governments, the states, and local governments? Sure. And what needs to be done to grow our fund for future generations?
I agree with that. In terms of the size of the NSIA relative to the size of the GDP of the country, it's very small. It is very small. And I think very soon the argument that we started late is going to wear thin. And so there must be a commitment to investing and, growing the sovereign wealth fund. The real kicker for any sovereign wealth fund is the consistency of contribution. It's not that you started with $1 billion. It's static. That's not going to help you because we also have 3 mandates. So it's future generations, it's stabilization, it's infrastructure. By the way, we're probably the only one with those 3 mandates. Most other sovereign wealth funds have 2 mandates: stabilization, future generations. That's it.
Okay.
none of the rest of the wealth funds that I know
focused on infrastructure.
Domestic infrastructure in particular.
Yeah.
It's a whole different skill set to manage and invest in that area. So, and that means that for the NSIA, and it has nothing to do with whether the manager or somebody else is managing it, for the NSIA to fulfill its mandate, it's all about consistency of contribution. The other sovereign wealth funds you have mentioned, many of them go back. The Abu Dhabi started in the 70s. Qatar started in the 50s. Okay, and for a long time, you heard nothing until they got to a certain size. So I agree with you, by the way, that there must be a consistent approach to investing in a sovereign wealth fund. And the impact should be measured in decades, in my opinion, because that's really the people you're comparing them to. Today, you're comparing them, after 30, 40 years of savings. But you must be consistent, you must start. And I think is something that we need to really address as a nation.
Well, Uche, it's interesting that you mentioned Abu Dhabi. We noticed like countries like the United States, many states within the United States have their own sovereign wealth funds,
Alaska,
like Texas, Alaska, North
Wyoming.
Dakota, and so forth, and Utah. Now, interestingly enough, doing research, we found that in Nigeria, Bayelsa has followed suit by having its own sovereign wealth fund worth $1.5 billion. How true is this?
I don't manage it by a sovereign wealth fund, so I probably.
So you don't know if you can.
No, I know that they have a program, and I was personally consulted when it was being started. I don't know the size of it. I mean, it's only the manager that can tell you the size of it. Okay. By the way, most other sovereign wealth funds, particularly the Middle Eastern ones, you don't know the size of them, do you?
No, I do not. Well, finally, would the NSIA consider issuing guarantees to investors who want to get involved in infrastructure projects to fund those projects?
The answer is no. Because we're explicitly forbidden from providing guarantees in the NSIA Act, the NSIA law. But having said that, we've done something that I think is really something that you should focus on someday. We created a company called InfraCredit.
InfraCredit. Okay.
InfraCredit is a company initiated, sponsored by the NSIA, and in conjunction with Garantco of the UK. The job of InfraCredit is provide bond guarantees for infrastructure bonds. So it's going to do two things. One, it's going to develop the bond market, and it's also going to develop the infrastructure bond sub-market, frankly. Because at the moment, people that want to build infrastructure go to banks. 3-year money, 4-year money, interest rate in the 20s doesn't help. If you have a good project that can benefit from an enhancement on your bond, we can help you drop the interest rate substantially. So I'll give you an example. The first transaction we wrote about a year ago, towards the end of last year, we took the interest rate of that company down by almost 8 percentage points.
Oh, wow.
10-year money in Naira. And that was because InfraCredit provided a wrap, what is called a wrap, like an enhancement.
What's a wrap?
It's a guarantee. It's a guarantee. It's a technical way of calling it a guarantee on a portion of the bond that they raised. And once we did that, pension funds, insurance companies were able to invest in that bond. So this is a company, again, that was incubated in NSIA. Now it's an independent company. It's operating in the next 6 months. But the idea is for this company, with its guarantee, to get latent pools of capital like pension funds, insurance companies to invest in infrastructure bonds. We have tenure elongation, which is the biggest challenge infrastructure have. I'm just telling you, the shortest thing we've done is the healthcare projects. And those took 18 months to 2 years to build. If you're taking money on a 3-4 year basis, you can never succeed doing that. So we believe that 5-10 year money is what you need. And then we've taken the interest rate of this company from mid-20s to high teens, to low teens, mid-teens. And my sense is that the more of this we can do, the more we can create a guarantee structure for high-quality infrastructure programs in the country.
Uche, thank you so much for joining me today on the Global Business Report. It's been a pleasure having you.
Thank you.
I've been talking to the Chief Executive of the Nigerian Sovereign Investment Authority, Mr. Uche Orji. That's it for this edition of the Global Business Report. Please keep it here on Arise News. But for now, on behalf of the teams here in Lagos, as well as London and Johannesburg, thank you for watching.